All right, so you know what I'm gonna do? I'm gonna just start going over my background while everyone is shuffling in. I don't want to take up because I don't want to take more of your Saturday than I need to. And of all the things that I talk about, probably my background is the least relevant. But I graduated from an Ivy League university. I went to the University of Pennsylvania for 8 years, and I majored in applied mathematics. And I received a grant along with my mentor from the U.S. Navy for optimizing underwater decompression schedules. It's a very dangerous task to come up from a deep dive. We made those dives safer for the U.S. Navy. When I turned that work in to the Navy, I was awarded my diploma with special distinction. I graduated summa cum laude with honors. When I finished my training, I was inducted into the Phi Beta Kappa Honor Society, and was really my goal and intention in life to go into teaching and research. And what I did was I applied to a number of universities and wound up staying in Philadelphia. As Rob had mentioned, I became a full-time professor at Thomas Jefferson University in Philadelphia. I loved the position while I was there. I published 15 peer-reviewed articles in top-tier journals. I taught an enormous number of undergraduate students and graduate students. I've always considered myself to be a scientist, a teacher, and an academician. And as I'm sure you know, sometimes life throws you curveballs. And I was forced to resign my position and come down to South Florida. Now, I could have taken a position at the University of Miami. It was available for me, but you know, I had really been bitten by the trading bug very early. And I felt that my background in applied mathematics would lend itself well to making me easily find a mathematically optimized method for trading that could be consistently profitable. So I decided to go into trading. Now, I released the first version of Right Line Trading 12 years ago. Since that time, I've been an invited speaker internationally in many countries, an invited speaker domestically in many cities, and I believe I've mentored close to 30,000 traders. Just this Wednesday, I did a master class in front of 275 traders, and we went over a lot of information, a real deep dive into the mechanics of trading. We went over things that I guarantee the vast majority of you are unaware of and have never been exposed to. Now, as I had mentioned earlier, in today's market environment, it is totally run by the large institutional traders. They decide the future direction of price on every financial instrument and on every time frame. Now, at any given time, there may be tens of thousands of small retail traders like us present in the market, but the only thing that we have the capability of doing is placing the market into chop. We push and pull against each other, but tens of thousands of small retail traders, all with no clear-cut understanding of the best direction to take the market, just create chaos and disorder. Now, when we're present in the market alone, we never want to trade. Our software is going to let us know that there's no institutional money present. Now, at some point, and we're going to watch multiple stocks, multiple futures markets, big institutions are going to step in. And when they do, they're going to hit a button on a computer, generate an algorithmic high-frequency computer-generated trade that's going to leverage an enormous amount of money. That's going to push a financial instrument in the direction that they want. If they want it, if they feel it's under priced and they want to take it long, it's going to go long. If they feel it's overvalued and they want to take it short, it's going short. Now, as small retail traders, and the reason why so few of us are able to trade profitably is that we don't coattail the direction that big institutional money sets. When they decide they want to take a trade long, we have to grab hold of their coattails and take that trade long. If they're going to take a trade short, we have only one thing that we can do. Again, grab their coattails and take it short. If we try to counter trend trade the direction of big institutional money, we are going to get stopped out consistently. Now, who are these big institutional traders? There's obviously many of them. Just to break it down into some fundamental categories, we have the big banks like HSBC, Bank of America, Deutsche Bank. It could be a big bank located anywhere in the world. It could be a 401k plan that's reshuffling, a mutual fund that's reshuffling. More commonly, it's hedge funds that actively trade. And even more commonly than that, it's big Wall Street money like JP Morgan and Goldman Sachs. And when they step in and they decide to push a financial instrument in the direction they want it to go, we, again, as small retail traders, have only one thing we can do, and that is grab hold of that instrument and ride it in the direction they set. This is the only way that we're going to get consistent winners, not only that hit our first target, but that are big runners. And we don't want scratch winners. We want these trades to have legs. And when we ride big money, they have nice legs. Now, there was a recent study, in Yahoo Finance, and I read this on the internet. It was a very, very good and well done scientific paper in which they looked at 1,000 day traders and swing traders just coming into the market. And each of these traders had to report on the methodology that they were using to trade. And it consisted of one of these 7 either indicators or systems, whatever you want to call them: price action, MACD, Elliott wave divergence, which is obviously a bottom calling, top calling system, price patterns, Fibonacci, and Gann theory. Now, a lot of the things that you see on the slide do have predictive value, especially price patterns. But if we utilize these alone without taking into account what big institutional money is doing, they are not going to make us profitable. These things have been around for 50 years, some of them 100 years, and all they have done is created an enormous loss record. Well, in this scientific study, they found that within 6 months, 90% of the traders in this study gave up. And on balance, they busted out 9 trading accounts. Now, it's my belief that if they would have taken this study out a year, they would have found that 95% of those traders would have given up, busting out even a higher number of accounts. The bottom line, and the reason is, it's institutional money that drives price, and they don't care about Fibonacci or Gann divergence. They're going to set tops and bottoms. That's the fundamental force that drives price in the market today. And if we do not respect it, it's going to come back to bite us. So I just wanted to show you really briefly on a falling triangle exactly what big institutional money does. Now remember, big institutional money loves to knock us around. They create the bull traps, the bear traps, the false breakouts. All these things are engineered, especially the bull traps and bear traps at tops and bottoms. They engineer those to trap us in the wrong direction and then run us over. Now they see a falling triangle. They see sequential lower highs equal lows, and a lot of small retail traders take their short off the upper line of resistance, anticipating a break of support, especially as the triangle starts to narrow. And when it's wider, if you take it You're going to get a bigger downside to support, but the pattern is going to start to collect a lot of short traders. Now, big institutional money, just like market makers, are able to see exactly what's out there. They're able to see our stops. They're able to see our trades. They see there's an enormous number of small retail traders short here. And so they shoot price long out of a falling triangle. They run our stops, and I'm sure you've heard of that term, that your stop run. Well, they're going to run thousands of stops. It's going to propel their trade long with even greater force and distance. It's going to make them more money, and it's going to be off of our backs. We're never going to let that happen to us again, because in this particular trade, we're going to ignore the pattern, and we're going to trade the direction that big institutional money sets. Now, if we look at this slide, we see that price is in consolidation here. And then we have a slowly rising or nicely rising pattern. Now, what I put below the price was just a standard MACD. And I really could have put anything below there. I could have put a standard oscillator. I could have put an ADR ADX. I could have put unbalanced volume, a McClellan oscillator. All of them work the same way. They use data that simply looks back as to what has occurred with no ability to tell us what's going to happen out into the future. And in fact, the MACD, just like every other indicator of its kind, the ones that people pile under their price charts, and then they have 2, 3, 4 indicators, all tend to hurt us. Now you'll notice here that in the MACD setup, our MACD line is the red line and our signal line is the magenta line. And as long as the MACD line is below the magenta line, our anticipation is for a short trade. And we're in consolidation here. We're anticipating a break in consolidation to the downside. What does big institutional money do? They take a break of consolidation to the upside. Now, if we're trading the MACD, we can't get in until 40% of the move has already taken place. And we're going to go long, and we're lucky because big institutional money is going to continue to drive price up. Now we come to the right edge of the chart, and we're in a point of complete indecision. Is the next candle going to be an up candle? Is it going to be a down candle? Or is it going to be a sideways candle? Now, if you think that the MACD analysis is going to provide us with that future predictive value, really, that is a mistake. It has no predictive value. What is going to drive price is going to be big institutional money. If we're tracking it, we're going to know exactly what the future direction of price is going to take. So if big institutional money is going to continue to push price to the upside, we know the next candle is going to be an up candle. If it steps aside, and we're going to know it immediately. In fact, we do an assessment on a tick by tick or cent by cent basis. We know that we're likely going to get a retracement back to mean, or price is going to go into consolidation. Either way, when big institutional money steps aside, we are going to close our trade. And if big institutional money stays in the trade, we know the next candle is almost certainly going to be an up candle. None of that is going to be elucidated to us based on this MACD analysis. Now, a reason I put this up is because a lot of traders, to try to overcome that, will put 2 MACDs, 2 oscillators, a McClellan, an OBV, a whole bunch of indicators. And all they do is sort of cerebrally magnify the direction the price is going. It's very clear. It's sort of a cognitive way of overcoming indecision by having 6 indicators all telling you that price is rising to the upside. but off the right edge, we remain in a position of complete indecision. So it's just an illusion. It provides our minds maybe with a greater degree of certainty. It's just hiding the truth from us a little bit better. Now, what we have to do and what our system does is a much deeper dive into the market. And the analysis that I like to use is you go to a doctor's office and your arm is red, it's inflamed, it's painful, maybe you have a fever, and you ask the doctor for some medicine. The doctor looks at your arm, he cannot make a diagnosis. He has no idea what's causing this inflammation. So what does he do? He does a biopsy. From the biopsy, he looks at the architecture of the inflammation, a deep dive below the surface of the skin, and from that, he's much more likely to provide you with an accurate diagnosis, give you the right medicine, you get better really fast. What we're going to do is we're going to biopsy the market, and we're going to look at something called price kinetics, which is completely different from price action. Price kinetics lie within the DNA of the market, and that is what's going to tell us with tremendous accuracy where price is going to move out into the future. So we have to we have to look at the market at a level deeper, and that's the level that creates Fibonacci, that creates these MACD crossovers, that creates price patterns. We're going to be looking at the fundamental force that drives price on the market. Now, this fundamental force is only going to get more powerful as time progresses. Big institutional money's stranglehold on the market today is going to become a chokehold on the market tomorrow. If we don't respect it and track it, there's going to be no way that we can trade profitably. And I know all these other gurus are throwing out these secret price patterns. They don't work any better than the price patterns that are out there now. So we're going to move from being a passive observer to gaining tremendous predictive power. And as I've said a few times, we do this by tracking directional flow of big institutional money. That is what drives price. Now we're going to start by looking at all the stocks on the Dow, the NYSE. We're going to look at the NASDAQ Cash 100, the Russell 2000 Cash Index, the S&P 500 Cash Index. And what we're going to do is we're going to be looking at each individual stock, and we're going to aggregate all 5 of these indices and create one big mass of stocks, which actually comprises almost every stock traded in the United States. Now, obviously, there are going to be some pink sheet stocks and some unlisted stocks that are not in here. And believe me, these are not stocks you want to trade. So what we need to do is for each incremental change in price, know which is operational. Is there an overabundance of supply? If there's too much supply, price is going to fall. Is there an overabundance of demand? If there's more demand than there is supply, price is going to rise. And the reason I even bother to mention this is I don't want anyone to forget that the markets are an auction-based system. And there's constantly a bid and an ask, and it's just like somebody standing at the podium going, you know, with that gavel, sold, sold, sold. And it all depends on supply and demand. Now the market metrics that we look at are the price kinetics that we do the deep dive in are the 2 fundamental ones. We look at the ratio of stocks moving on up volume to the ratio of stocks moving on down volume. This comes to us via a very special data feed. We look at the ratio of stocks moving on the uptick to the ratio of stocks moving on the downtick. Now, these are on every single stock traded in the United States on those 5 exchanges. Now, in general, the ratios of up volume to down volume and uptick to downtick stay about equal. That's the natural predisposition of every closed system, and that is to stay close to mean. And mean here is a ratio that's approximately equal to 1. So 1 is the mean ratio. Now, we as small retail traders do not have the power to drive that ratio of up volume to down volume and uptick to downtick any appreciable distance away from 1. We can jockey it a little bit up and down, maybe create a little more up volume than down volume, a little more down ticking than up ticking stocks. But that's why we can't create a trend. And that's why the market just chops. It's chopping on those very slight imbalances in these 2 ratios. But that's not going to stay this way. Eventually, big institutional money is going to step in. And whoever made the slide put this little guy in there pushing up to represent that now big institutional money is hit. They've triggered the computer, and they are now pouring a huge amount of money into the market. And now on all those stocks in the aggregate, we are swamped with up volume when compared to down volume, and swamped with stocks moving on the uptick to those on the downtick. Now this ratio is appreciably greater than 1, and in order for it to give us a signal, it's got to be statistically significantly greater than 1. It's got to be a huge imbalance in that ratio. And that's what big institutional money creates. These massive imbalances where the market is swamped and the vast majority of stocks are moving on up volume and on the uptick. We have to track both metrics, because although you may think that they're absolutely linked, they are not. Occasionally we'll get an imbalance of one and not the other. We need a statistically significant imbalance of both. And then eventually we're going to get the reverse. Now the markets are going to be swamped and stocks moving on down volume and stocks moving on the down tick when compared to up volume and uptick. Now the ratio is going to be statistically significantly less than 1. And unless it reaches statistical significance, we do not get a signal, because big institutional money is going to easily take this 1 standard deviation away from the mean. That is statistical relevance. As soon as it does, we're going to know immediately that big institutional money is at work, because we as small retail traders cannot come close to creating this kind of scenario. So just to recap, we're looking at all 5 of these markets when in the aggregate, we get an overabundance of up volume and upticking stocks. We're going to get an up triangle that's a market internal signal. And on balance, when we get an enormous overabundance of down volume and down tick, we know that ratio is statistically significantly less than 1. We're going to get a down market internal signal. Now the system has to be a little smarter than this. I'm going to show you how we make it smarter, because these signals are based on all 5 indices combined. And the reason I showed this to you was simply to acquaint you with the theory that we're using to track big institutional money. So I'm going to move right to a chart. Now, this may seem like a lot to you, but I can tell you it's very simple. I'm going to show it to you on a live chart. The one other thing that big institutional money does create that we need to track is market structure. Now, let's say we're looking at a 5-minute, 15-minute, and 45-minute chart. Without institutional money, the 5, 15, and 45, they're going to move in complete disarray and totally chaotically. Big institutional money comes in. The 5, 15, and 45 align like soldiers. The 50 is falling on all of them. The 15 is falling on all of them. And that creates this pink background. We don't have to track the higher time frames. The system does it for us. We're only going to trade when the second metric that lets us know that big institutional money is around, which is market structure, aligns in the direction we want to trade. And that alignment is only seen when big institutional money is present. Now, the third line you see, now this is our 50, here's our 15, is a volume confirmatory signal, which is discretionary. In some trades you want it, in some you don't. The system is going to make that decision for you. So you don't really have to think about it, because we, in our 2.0 version, which is coming out this week, we're going to put a big dot below the candle that's going to give us the entry, taking into account that volume confirmation, in which you do need sometimes and you don't need sometimes. Now, right here, we have the market internal signal. We have that multi-time frame alignment and trend. Here's our entry right here. We go down. Now, we don't, once we go into the trade, we do not touch it. We let the system create a first target and a second target based on the average true range of the instrument. We don't do anything with the automated trade management strategy. And when momentum wanes right here, we're going to hear the system say stop filled, and we make 34.5 points. Now, these are straight trades, so they're easy in terms of trailing. Some of these trades are tough to trail. The momentum-based trailer does tremendous, works really helpful to keep us in the trade. Here's a buy-sell zone that we calculate off of the dome. We know there's a tremendous amount of buyers here acting as support. We have to trade below it. We break below. We're in right here. Down we go. Out when momentum wanes for 49 points. So this is over 80 points on this trade. That's 320 ticks. And these are exceedingly low risk trades because big institutional money. Now these market internals are only looking at the NASDAQ 100 cash market. They're not looking at the S&P, they're not looking at the Dow, and they're not looking at the Russell. The only market or the only group of stocks we care about is what's going on in the NASDAQ 100 cash. And when it's getting pummeled to the downside on an enormous overabundance of down volume, and stocks are moving enormously on the down tick, our futures market is heading down. That's the direction we're going to trade. Now, here's another trade on the NQ. These are all trades we took in the live trading room. Now, if you're worried about getting an entry, you don't have to, because I'm going to scream them out to you well in advance. Now, I think out loud, so you're going to understand my rationale for the trades. Eventually, I'm going to make you an independent trader with our teaching, but a lot of these trades are no-brainers, and I'm telling you, those are the ones that I like to take. Here's the VWAP, which we must have on the chart. We trade long above it. It's a tremendous area of resistance or support. We're in right here, and see this area of chop. A lot of traders would exit here because it's a period of uncertainty. We're getting up candles, down candles, but momentum is with us, so the system keeps us in the trade. Remember, we're not touching our mouse. We let the trade evolve, eventually go all the way to the top. This is a tremendous sell zone. There's a lot of sellers sitting. Price hits it and bounces. We're out. We make 68.25 points. Now, here's the E-mini. And in the E-mini, we don't need necessarily that volume confirmation. We have the pink background, the market internals. We know what's happening to the S&P 500 cash. We are tracking and trading in the direction of big institutional money. Down we go. Now, this is an area of support. It's a little riskier trade that I took. Another area of support. We could have bounced. If we bounced, we would have made money, but not a lot. But we did break it. We went all the way down, out on a loss of momentum for 19.5 points. There's the Dow. It was the Russell 2000. You know what market we're looking at? The Russell 2000 cash. Again, if you're not unclear, now the system is as of next week is going to put a multicolored dot below the candle, taking into account whether or not you need the C2, so we won't have to project it on the chart anymore. You don't need it here. In we go. I know you don't need it. I'm going to call this short trade. We go down for 14.5 points on the Russell 2000 round, all the way down here, almost at the bottom of the trade. And here's a short on the Dow, straight down, out on momentum. Now, I skipped a trade. I'll just skip that one. Here's an entry, C2, same thing, down we go. We lose a little bit of direction here, but momentum stays with us. Excuse me, we continue to go down. This is 106 points. And let me tell you, on the NASDAQ, on a trending day, we can get 50 to 100 points with no sweat. And the reason we can is because we don't touch the mouse. The system trails the trade without fear or greed. It's emotionless. All it does is track momentum based off this 15 proprietary line. And as long as it's with us, we stay in the trade. I traded it with 3 contracts. I made $4,220 on this trade. That's on a live account, not a demo account. And this is the last NASDAQ trade I'm going to show you. We went long right here, did not need the C2, up we went. This is the first trade we took in the morning. And the blessing we got on this trade was that we got 240 ticks. I'm looking for $1,000 a day on my trading. My profit target's $1,000. My loss limit is 500. I make money 8 to 9 to 10. I got that wrong. 8 to 10 out of every trading sessions, I'm going to make money. So if my loss limit is 1/2 of my profit target, I'm going to make great money every single week without having to make money every single day. And it's really impossible to trade without making mistakes. And most of the time when we don't make money, it's me. But we're making the system even more dummy-proof so that I don't make any errors, and you're going to see that the first few people who come aboard are going to get something very special. Now, here's some trades on stocks. It's the same thing. The area of support hadn't formed yet. We're below the VWAP. There's the market internals. Salesforce, I think, trades on the NASDAQ. If it doesn't, if it trades off the S&P 500, the market internals, no, we're going to take this trade short. This is a 1-day hold. We make 57%. Here's Tesla, market internals. I don't know if Tesla's on the NASDAQ. I know it trades on the S&P 500. I'm not concerned. I don't have to care. The market internals are going to look at the market that has the smallest number of stocks. So if any stock trades off the Dow 30, it's going to look at the Dow 30. And up we go, gap up, loss of momentum, 91% on the option. Here's GE, Mr. Boring stock, goes all the way down. Excuse me, this is my mouse. 84% on the option. And I'm going to show you some live trades. Roblox, you can see they just keep recurring. It's the same pattern. Pink background, 50 red, 15 red, market internals. There's no C2 confirmation on stocks. Down we go. The system carries the trade, closes it. 70% we made, not 68. Whoever made this slide put that percentage in wrong. Here's Netflix, huge, great trade to the downside. Now this is a 1 hour on Caterpillar. Remember, you can trade any time frame you want. We trade a 5-minute if we day trade. Now I put out a lot of swing trades. I'm sending out 3 swing trades to Sunday night. And they're all gonna last approximately 2.5 months. Now Caterpillar on a 4 hour lasted 6 weeks, stayed to the upside, momentum carried us up. The market internals got us in. We make 311%. Here's Coke to the upside, market internals. When you trade right off the VWAP, it's a great trade. That's where the hedge fund computers are looking for great upside trades. We have the market internals, dark pink, dark green background. Up we go. It's a multi-day hold. Coca-Cola also lasted about a week. Now here's Salesforce on a 1 hour, and you can see that they just really all look the same. And I'm going to go to Scott's Miracle Grow. This is a 4 hour market internals. Down we go. The exit isn't even on the chart. I didn't want to squeeze the candles any more than I did. This is a $33 move, a 237% move on the options. Now, what I wanted to show here was simply on a day where big institutional money is simply driving price to the downside. What I did was I took the NASDAQ futures market and I squeezed it as tightly as I could. Now we trade our own engineered Unorenco candles on futures. You can trade futures on time-based charts if you like. I happen to personally prefer our own Unorenco. I trade time-based charts on stocks. But the point of the slide is that from the open, for the first hour and a half of trading, big institutional money is only angled to the downside. And the only direction we're ever going to trade is short. Now, there's 2 reasons why. Obviously, number one, the likelihood that our entry is going to move for us is exceedingly high. And 2, we don't want to get just a winner. We want to get a winner that amounts to a runner. We don't want to get 25 ticks on the NASDAQ. We want to get 50 points on the NASDAQ. And we're not going to ever get those trades unless institutional money is driving the NASDAQ cash market to the downside. Now, all the other small retail traders trading whatever the heck they want to trade are going to take these long trades. We have no market internal signals. If we were lucky enough to get in here somewhere to give us a long, look how far it goes. It goes nowhere. It's a scratch winner, and we don't, obviously we're going to get scratch winners, unfortunately, but we're not going to take a trade where the likelihood is high that that's all we're going to get. Because we want to take 12 to 15 trades a week, not 10 to 12 trades a day, and walk away with a lot of money. So there may be some days where we don't get any trades, some days where we get 2, maybe a day where we get 3. But if we don't have big institutional money at our backs, pushing the trade in the direction we want to trade, we're never going to chase price. Now, I wanted to show you, this is David Weiss's room, and David just trades options. Now, a lot of his trades last 1 day. He holds many overnight. Now, he trades a live account, and that's why he said this is a certified performance, because it's taken right off his Thinkorswim platform. There's no guessing. He doesn't yell out entries and yell out buy, and sell. He trades live. Now, all his trades go out via SMS, text message. So if you're not in his room, you're going to get him. If you're driving down the road, you can still trade him, because I do. The Thinkorswim app is great. Now, he took 294 trades. I'll show you the time frame. He got 271 winners. That's a 92.2% win percentage. I mean, I don't know how anybody can do better. He had 15 losers, and if the trades didn't make an appreciable amount of money, he just counted them as scratches. Now, his maximum consecutive winners was 32 winners in a row. Maximum consecutive losers was 2. Now, here's his daily. Now, the reason I didn't put up an equity curve is your equity curve is totally dependent on the number of contracts you trade. If you want to trade 10 contracts on each of his calls, you could have made 50 to 60,000 bucks. You only want to trade a couple, you would have made less. But the key is on the risk you take, your return on investment, or your ROI is the same. And for the last 60 trading days, and I have to update this is through 12/14, and let me tell you, his win percentage has not changed. He's been doing this for 20 years. He only has one down day of any significance, and it's about 750 bucks, and a lot of home run days and a lot of modest wins. This is how you create a tremendously powerful equity curve, and this is a real curve. Now, I believe this. I'm going to show you more metrics, more in a minute. But I believe this is the most powerful software trading methodology available to us as small retail traders. We can't do better than trading in the same direction as the entities that create the trend. If we try to do anything else, where are we going to wind up? We're going to wind up walking off the cliff like 95 out of the last 100 day traders on average have gone. We really don't have a lot of choice. I mean, I hate to say that, but unfortunately it's the truth. And I know all the people in this trading room, and there's an enormous number, thank you for coming back, know that big institutional money runs the market. And if we don't trade with them, we are not going to consistently crank out winners. If we trade against them, God forbid, we're going to get run right over. Now, I have some testimonials. I'm only going to play you the last two, and they're only about a minute.
Pinpoint exit and entry strategies for getting the best trade options possible. I'm now a full-time trader. Dedication is required during the learning process, but right line trading has made it easier. Mark and his team are always accessible. Whenever I have a question, they have diligently and successfully covered any questions that I might have.
Hi, my name is Father D. I've known Mark Sachs for about 25 years, and I joined Right Line Trading with Mark Sachs 2 months ago. And about a month ago, I decided to trade with Mark and manage my portfolio through his leadership. As a result, Right Line Trading has helped me grow my portfolio by over 400%.
Now, I mean, that's an ordained minister who has his congregation up in Broward County. He's maybe about 35 miles away. The man who preceded him is a member of the Miami Chamber of Commerce. I have 3 others. It's a Saturday. I don't want to take up more of your time, but those are about as honest a video testimonial as you're ever going to see. And I just threw up some trust pilots. I'm not even going to bother to go through them. I don't even know who wrote this. He has a win percentage of 80%. Rian Kruger, I know really well. He's been with us for 5 years. He's going to stay with us for the rest of his trading life. Larry Gonzalez came aboard. He's a brand new trader. He's yet to be disappointed. He just came, when he wrote this on December 8th, he had just started. Now, the workspace is very intuitive and very easy to understand. you're going to find that our 2.0, all you have to do is read a dot, but even right now, you don't even have to do that because you're going to be in one of 3 trading rooms. We all trade our own accounts. We all trade live, and we all yell out the entries long before you get them. You just hang with us. We're very likely to make you good money. But I want you to understand the system. Don't get me wrong, but we're there to quarterback for you. We don't call anything in retrospect. So it's a great system for beginners, and I'm gonna push all the junk you may have learned out of your head and teach you how to trade the right way. Any account size is fine. You can trade the micros on the Dow, Russell, NASDAQ, and S&P, one contract on stocks. David, who day trades either one day or overnight, obviously the premiums are very cheap. If I swing trade, and I'm sending out 3 swing trades Sunday night, I try to keep the premiums low. If they're extremely high, I'll create a spread, but I tell you, I hate spreads, and I will teach you about those in the master classes. The best way to trade options is to be a naked trader, and I will tell you about cash secured trading. That is just amazingly powerful. You just have a few bucks in your account, you can leverage this tool and just make great amounts of money on inordinately low risk. Now, trading success does equal financial freedom. It's a blessing. Our system works, and you're going to be with 4 people who trade it with their own money. And I just want to say this. Somebody offers you a trading system or a newsletter that gives you entries. If they can't verify, if it's a software, that they take the trades live with their own money, you should just leave. Because if they're going to offer it to you and ask you to pay money for it, and they do not have the confidence in it to sit there and take the trades with their own money, then what is that worth to you? I mean, you want to see them trade their entries on a live account. In addition, this is how you're going to learn how to trade. A system that's super simple, that has a tremendously high win rate, and that is traded with me and one of 3 other traders who use our own money. Because we're subject to the same fear and greed that you are. I make mistakes every now and then. So when you see an equity curve, it takes that all into account. When you just yell out entries, there are no mistakes. Now, I just wanted to show you really briefly why I came down to South Florida and went from an academic position to ultimately to trading. Was I had gotten divorced. I had a time-sharing agreement with my former wife. It fell apart. I wound up having to become a solo dad, and I take care of my son 100% of the time. I have to get him up at 6 in the morning. I take him to school at 7. I pick him up at 3. I help him with his homework. I make breakfast, lunch, and dinner. I do 25 loads of laundry. Hey, by the way, as part of this deal, if you have a little excess laundry and you want to mail it over, I'll do your laundry for you, and it'll come back all pressed. I am so great at doing laundry. I do 25 loads of laundry, and here's me coaching his 2nd year of Little League Baseball. And there's no way I could be the kind of hands-on dad that I want if I didn't have the time flexibility that this discipline provided. Now, it wasn't easy to get here. It took 12 years of evolving this system, but it is one great system. I'll tell you right now. Now, it's a weekend. You can continue on your current path and do nothing. If you're, slogging through the swamp, and you just can't make it work, you're on a treadmill, you're bleeding money in commissions, that is going to come to an end. Now, you obviously have to bring to the table 2 things: patience and discipline. When there's no trades, we're not going to trade. So sometimes it's boring. But you know what? We're not in this to have fun. We're in this to make money. This is our profession. So I'm going to talk. Craig Emery's going to, everyone has a halfway decent personality, I hope. But you're just not going to, have any thrills trading, because we're not here to have thrills. We're here to garner great money. Now, so I would urge you to take action today. This is the best offer we've ever made. We do this on Traders Corner because we want them to bring us back, and we're going to give you a very, very special deal. Now, I'll just tell you a really quick anecdote, because I'm going to bring this to a close very soon. And that is, when I first came down to South Florida, I bought someone else's software. I thought I knew a little bit more than I did about trading because of my background. I paid $17,000 for the software. It was a disaster. And I saw their live trading room. Nobody took any trades. Everything was called out after the fact. I was flim-flammed. I wound up throwing $17,000 out the window, and so much money trading. I'm embarrassed to tell you about it. When I called them up and asked them what the heck was going on, they said to me, I was just a lousy trader. I mean, that was their answer to me. It wasn't to try to teach me, because there was nothing to teach. I understood the system. It just didn't work. And that's when I sat for 2.5 years and created the first version of right line trading. Now, our educational support is unmatched. We're always here. When you call us up, you get us. You don't get a sales desk in Thailand or the Philippines. Our whole office is here like 8 to 9. I want to say 10 hours, because sometimes it is. And we're here to support you educationally. Nothing, no matter how good the software is, the bedrock is you need educational support. If I need to do a one-on-one with you, I will do it. I've done many. I don't charge you anything. I believe it or not, these are very cynical times with everyone offering a lot of junk. I care about you all. I respect your money. I couldn't sleep at night if I didn't know for a fact that this software worked, because I trade it. Now, the first 10 who come aboard are really going to get software you're going to want. It's up to you, but I'm going to show you the offer. And then I'm going to go through it a little bit in a little more detail. Now, everybody's going to get the software I showed you, the Market Internals Dominator System, for $997. It's normally $29.97. Now, that's a lifetime offer. You are never going to pay us another penny. And that involves a lot of work for us, because we're always upgrading and making the system more powerful. That is the linchpin sort of dogma of mathematical modeling. You don't have a static workspace. It's simply not at the point where it's so great that there's no way it can work better. We are always looking to make fundamental changes to make our software more powerful. We just found one, and that version's coming out early next week, and it's going to go out to everyone. And we don't charge you a 2.0 version and nickel and dime you. That's it. You'll never pay us again. I have people who bought the software 10 years ago that have been getting upgrades and add-ons for the last decade. Now, if you're one of the first 10, you're going to get our auto trader. Now, if you don't get the auto trader, you just have to press your mouse when somebody yells out. But the auto trader is going to allow you to create 2 revenue streams. It is an unbelievably powerful auto trader. Sergio is in charge of our programming, wouldn't let us release it for 6 months when I was ready to let it roll, because he wanted to forward test it. He didn't want anything based on back testing. And I'm going to show you its profit, and it's absolutely awesome, and it's a forward tested value, not back tested. and it's based on trading 5 micro contracts. You're also going to get 3 live trading rooms, and I'm going to show you those trading rooms. Now, first, here's the system. Just wanted to show it to you. Now, the first 10, here's our automated system. Now, here's the assessment of the uptick versus downtick. You have 5 lines because it's looking at 5 markets. It knows which lines to utilize based on the future or stock that you're trading. And on this trade, it's up 100. Actually, let me say it only trades futures, but it trades all the futures index equities, and you don't have to touch it. It was up $131.50. Now, for some reason, the wing and the dome don't correlate. Every now and then that happens. Normally, they're going to be identical. Here's another trade. It's up 131.50. Oops, it's the same trade. Here it is, 151.50, 151.50. And you can see it's making an assessment. Every time it decides, it projects it on the trade or on the chart. So you know what it's thinking as the move progresses. And on this particular day, it made $1,302.50 on 5 micros. And you can see that 5 right here on the buy limit. It's looking for 5 contracts, and they're all micro contracts. Now, here's its equity curve from January 3 through February 14. It's up over $13,000. Now, that's it trading from the open through 1 o'clock in the afternoon. Now, we also, on this particular case, we didn't set a profit target. We let it trade and try to make as much money as it could. But we set a loss limit of $500. If it lost $500 in a session, it shut down. But it could make as much money as possible. And you can see it stutter stepped, but that's where it traded. And this is off, and these are live metrics generated right off the back end. Now, the 3 live trading rooms that you're going to get, if you want to trade options on stocks, I've never met a better trader than David Weiss when it comes to swing trading, when it comes to day trading and holding overnight. I mean, I can't do what he does. And I think if I studied his methodology, I might never get as good as he is. I've never seen a guy who does so well. He's mostly a naked trader like me. He buys calls and he buys puts. His trades are so easy to take. He gives you plenty of time to get in them. And the other thing he does is once it hits, he's going to give you a stop and a target. So you must need to know how to place an OCO order, which is one cancels the other. It's really easy to do on Thinkorswim. You're going to have your profit target set, your stop set. Is a 92.5% win rate. In my futures room, I trade the NASDAQ and the E-mini along with Craig Emery. And in David Kushner's room, he trades the Russell and he trades the Dow. You have access to all 3. You're going to get 3 links. You can go from room to room to room. And all of you are going to get his alerts via SMS text message. So you're not going to miss out on one of his options trades. And if you're halfway fast, you can get every single one of them, unless you're in the middle of a futures trade. But in general, that's extremely rare. Now, again, I just want to give you the price. It's $9.97, first 10, all for the same price of $9.97. Get for life the auto trader. As we make it better, we give you the better version, and you get the live trading room as well. And I just want to encourage you, if you want to lock in that first 10 price and you have any question, now I'm going to answer questions for you, and I'm going to show you some trades. I'm going to show you some trades from Friday that we took. Put your username and Skype or your name and phone number in the chat, and you're automatically going to be locked in at the $9.97 with all the bonuses. And I'm just going to, well, let me go to questions first. Let me bring him over here. Now, all the questions prior to the collapse of the platform are gone. I'm sorry, but I assume that you just typed them in again. Hey, David's profit factor. You know, I don't know, OM. I just don't have the number. I mean, if I had his back end, I could tell you. But listen, at 92.5% winners, it had to be awfully good. I'll tell you, I just don't know the exact metric. And I'd rather tell you I don't know than make up a number. Because I don't. Hey, Kenneth, Phi Beta Kappa. Yes, I was. You don't know what Phi Beta Kappa, you know, it's an honor society. And in order to get inducted, you have to not only graduate in the top 2% of your class, but you have to have some evidences of outstanding academic achievement. And I didn't get elected till after I graduated and finished my training. 6 months later, I received a letter. You know, you ever heard of Phi Beta Kappa key? I mean, if you want, I'll take a picture of it and send it to you. It's got my name on it. It's a little rusty because I got it a long time ago. Now, can large institutional trade in dark pools to disguise their trading volume? Let me tell you, Kenneth, I have not found that any dark pool volume. Let me put it to you this way. We're looking at the ultimate outcome of what big institutional money is creating, whether it's trading out in the open or trading hidden. And that is the creation of stocks on the uptick, on up volume, or the downtick and down volume. If they didn't do that, then the stock wouldn't move in the direction they wanted. So we're sort of looking at what their trading is causing. So even if it's traded in a dark pool, we see the result of what they're trying to accomplish. Drive a financial instrument up or drive it down. Mohammed, just call it and schedule. I promise you, you can have it. It does work on Thinkorswim, Mohammed. Mailbox is full. You know what it is, Peter? Rory is probably already on the phone, and because it's a Saturday, you know, we have the calls forwarded to him. So if we were here in the office, we've got a whole bunch of lines, and you'd get right through. Just try him in 5 minutes and you'll get him. And this poor guy gets so many phone calls on a Saturday, and we are open on Saturdays if you have a trading question, that he's just been swamped. So just give him a little bit of time and he'll be there. Okay, Robert, we got your number. Mohammed, we got your number. Alan, we got your number. Victor, we got your number. What if we want to continue trading rooms after 2 months, OM? It's $139. Now that's only for you guys on this offer. That's 3 trading rooms for less than $50. They are normally $179 per room. But because you came in on this Traders Corner special, you get all 3 trading rooms for $139. That's the only recurring fee. The reason I didn't mention up front is you don't have to stay. It is not a mandatory fee. If you don't stay in the trading room, you're still going to get all our education. You're still going to get our master classes. You're still going to get any special things that we have. You're still going to get your upgrades. Nothing changes. Thank you, Mark. I can feel the passion and honesty. Thank you, Joseph. I mean, I honestly, you know, I honestly couldn't sell the software if I didn't think it worked. And I mean that from the bottom of my heart. Hey, Bill. Nice job. I hope you have you too. You have a great weekend. Hey, Mohammed. Mohammed, Rory will call you. He'll probably call you Monday morning, but he will call you. Hey, Gary, thank you for your name and number. Joseph, thank you for your name and number. Oh, that's okay. You put your name and number in, Joseph. You locked it in. Hey, Ishwar, the automation's ready, Ishwar. You come aboard on Monday, it's on your computer. Satvir has a current order. It has been updated with the market internal, Satvir, and Sergio is gonna configure it for you. Hey, David, do you offer? Okay, David, just call us. We're very sympathetic, believe me. Hey, Joseph, thank you for your name and number. Okay, Bob, I mean, we have so many names and numbers here. It's gonna take Rory. Give Rory a little bit of time. No, market internals are for stocks and futures. Remember, Joseph, they directly act on stocks. But if you're trading the NASDAQ futures market and the NASDAQ 100 cash market is getting decimated on an overabundance of down volume on the downtick, that futures market is going down. And those market internals are very, very accurate in the 4 index equities, the E-mini, Russell, Dow, and NASDAQ. You're going to trade those with tremendous precision. If the market internals aren't around, I don't want, people can't sell me that trade. Thank you, thank you. Okay, great, Peter. Great to have you aboard. I promise you, we will do our best for you, and you are going to become a really good, professional, profitable trader, because we are in the room. Great, thank you for coming aboard. And thank you, Satya. Great to have you aboard. Alan, thank you for coming aboard. Maria, thank you for coming aboard. Pierre, can I trade from IB? Now, Interactive Brokers does work. The exact configuration for IB, you're going to have to speak to Rory. I'm sorry, but I don't want to give you incorrect information. I think the whole system's configurable except the automated component, Pierre. We're going to have to set you up on NinjaTrader, but everything else works on Interactive Brokers. That I know. Just to verify what I said, I would call Rory, and the number's right on the slide there at 786-732-4656. Hey, Carol. Carol, you speak to Rory. It's not quite, but you'll when you speak to him, I mean, he'll make you really happy. Jason, thank you for your name and number. Geez, I mean, honestly, we have 30 names and numbers. Okay, great, David. Thank you. Is it possible to follow the room for one day? Pierre, just speak to Rory. Hey, Chris, is the auto trader truly set and forget? Listen, Chris, the set and forget is operational as long as you have a virtual private network, so that your trades will be maintained, and you have a battery pack backup. Because your worst case scenario is that you're away and the electricity goes down in the middle of a trade. Now, if you have a VPN, I think that's all you need. The VPN will keep your stops and everything intact, and you don't have to worry. Everything else is set. I mean, remember, there's a few things on the auto that are discretionary that you're going to decide. If the most you want to lose in a day is $400 on, say, 5 micros, we're going to set it for you when Sergio configures it. If it hits that minus 400, it shuts down. If you want to make 1,000, when it hits 1,000, it shuts down. So you're not leaving the system in free fall. So you go on a trip, you come back the next day, and you're down $8,000. The worst that can happen is that it's a drawdown day for you and you've hit $400 and the system is out. And the best is it hit your up target, and then it could be anywhere in between. But it really is a set and forget, but you need a VPN just for the worst case scenario where your electricity goes down, something happens with your cable connection, and that will keep your trade intact. Speedy servers is super cheap, and if that's your intention, I would recommend getting them. They're in Chicago. They're like 8 floors underground. A lot of Fortune 500 companies have their servers with Speedy, and they're great. We use them, and they're absolutely fabulous. Hey, Donovan. Thanks, Mark. Very good presentation. Is your website working? A spot in the trading room. I already have the software. The website should be working, Donovan. If not, just call Rory. He'll put you right in. You know, we're in the middle of upgrading the entire website, and I just don't know what's working on it and what isn't. But we actually hired outside contractors to build that website out and really make it shine. So I can't tell you for sure, but Rory will be more than happy to do it. Hey, Pierre, got it. Okay, no problem, Pierre. We'll take care of you. You're locked. You don't have to use the promotional code, David. We're gonna leave that that price in, but once we hit 10, we're gonna change the price on there. All it takes for us is to do a flip of the switch, and it's just gonna go, and what you're gonna buy, the price is gonna stay the same, remember, but when you look off to the left, it's not gonna have all the add-ons that you have if you buy when there's 10 or less. My pleasure, Carol. And Rex Carroll says, trading for 25 years, Right Line is the best turnkey system I've used. And thank you, Rex. There's no monitoring it. If you don't want to monitor it, Chris, you don't. Remember, you're not doing anything for it anyway. Remember, if you monitor the system, it'll teach you how to trade, and you can always intervene, but I do not recommend stepping in front of the auto. I strongly recommend you letting it trade. And if you elect to use an auto, let the auto work. You can still trade discretionarily. I mean, if you want to trade 5 micros on the auto, which is what I recommend, you can still trade 5 micros in the trading room. And you simply are going to create 2 revenue streams. All you need is enough equity in your account or enough margin in your account. But I would not intervene, but that's totally up to you. You can if you want. You can always click your mouse and override the auto. Hey, Mark, when you say 5 micros, how much we have? 5 micros will cost you $2,500 in your account. No, I'm sorry, much less than that. 5 micros will cost you, it's 5 times 50. Yeah, it's $2,500. It's all you need to trade 5 micros. And listen, you don't need to trade 5. You can trade 3. It'll cost you $1,500. So you can start with a very small amount of money. Remember, your ROI or your return on investment or your risk to reward is exceedingly strongly in your favor. So you can start with a smaller account and work your way up. You know, start with 3 micros, start building equity, go to 4, build equity, go to 5, and then maybe you'll even trade a full contract if you want. So it's totally up to you. I just wanted you to know that the equity curve I showed was built on 5 micros, not on 1. Thank you for your phone number. Thank you. What is the company name with the sugar? It's called Speedy, SPEEDY server. Google them. They've got a beautiful website. Honestly, they're very inexpensive and they're extremely reliable. And honestly, I mean, I don't want to bring up anything bad, but if we have a nuclear attack, Speedy server will still be operational. And honestly, that is the goal of a server company. I mean, these Fortune 500 companies want to preserve all of their information in a place where some horrible Holocaust is going to preserve their data. And Speedy is way underground. It's a bunker. So it's a great place and it's very reliable. We've been using them for 8 years and we've never had a down day with them. Hey, Carol. Carol says, I'm using it every day and I love it. Thank you so much, Carol. Hey, Adam. Does the auto have to turn off during the open or news? Listen, I would not at the open, Adam. We don't turn it off on news. And we haven't optimized it by turning it off on news because Sergio generated that curve. And Sergio doesn't have a clue when news is coming. So that is the equity curve traded through news, traded through everything. And remember, it's very, very tough for the system to garner an entry on news because the market moves so erratically and it is not pushed by institutional money. You almost never get a market internal signal. Now, obviously, news could trip it up, but news could also give you a monster winner. But I can just tell you, we have not shut it off. Hey, David, can you show a few more trades from the auto? Those are the only three I have, David. I mean, Sergio wanted to give me video and everything, but Traders Corner is going to be kicking me out. I'm already getting text messages to leave. So, I mean, I have more information to show you. I just don't have the time to do it. Remember that the automated system is going to take 3 to 5 trades a day. So I mean, I could show you hundreds of trades on the system. I just wanted to give you a feel for what you're going to see on your charts. We don't look at those 5 lines. We look at the triangles. The system is actually looking at all 5 lines, not at the triangles. I mean, it's doing a little bit more thinking. And last night I saw the movie, that movie where the doll goes berserk. I can't remember the name of it. It's a little toy. It's a really good movie, but I mean, it processes a lot of information. Okay, it's $250 for the micros, $2,500 for the mini, I think. No, I think it's $50 a contract of margin, David, for a micro on the NASDAQ. That's I believe so. And 500 per contract for the full. So 5 times 500 be 2,500. And you're right, 5 times 50 is $250. I don't know how to add. So if you want to trade 5 micros, it's $250. Thank you, David. Hey, Adam. Also, does the auto work in? No, it works, Adam, only in the 4 futures markets where we have the market internals. Ultimately, we are continuing to work, and we're going to get it working on the very volatile stocks. But it works so great on the futures right now, it's worth giving out. And remember, you're going to get the upgrade on the system. When it starts trading specific stocks, you're going to be able to add them. And that's what we're working on. And eventually we're going to bring it across. We're going to bring it across to multiple stocks. We just need a lot of volatility, and we know what stocks we're going to target. And Andrew, again, you got me right, and I appreciate it. So listen, everyone, this is my 3rd text message from Traders Corner. I gotta run. I thank you so much for the many of you who've come aboard and all the numbers, names and numbers that I've gotten. I'm telling you I'm very, very transparent, very honest, and what you see is exactly, what you see when you come aboard is exactly what I described. You're going to see 4 traders who know what they're doing, who garner money 8 to 9 out of every 10 trading sessions. And David Weiss is just unbelievable in his room. You're going to get all his trades. Hey, Carol, thank you for your number. And David Weiss, I've never seen anyone day trade and swing trade options like that. If you come aboard, you're going to get 3 trades on going out on now Thinkorswim or Ninja, James. Satya, thank you. I'm getting more phone numbers. And remember, you're going to get 3 swing trades. Now, the three swing trades I'm sending out on Sunday night are all puts. There's 1 bull put spread, 2 naked put trades, and I worked for a long time on these 3 trades. These 3 stocks are going down, and we're going to ride them down, and they will be going out Sunday night. So listen, everyone, have a wonderful weekend. Rest up. watch some TV. If you're married, take your spouse out and have a nice dinner and enjoy your family. And again, I appreciate your time, and I thank Traders Corner for allowing me to be in their symposium. Again, everyone, have a really, really wonderful weekend. Take care, everyone. Bye-bye.